Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, please keep commenting on our live feed and we'll have your questions addressed by a technical expert before bringing him on board. Let's see what the global handover looks like, and it's been a strong one actually. European stocks closed sharply higher. Stoxx 600 closed 1.5% almost higher despite hovering around the flat line for much of the session. DAX soared as much as 2.7%. All eyes this week on ECB's policy meeting on Thursday, with policymakers having given advance notice of a first hike in 11 years. On Wall Street, stronger than expected corporate earnings drove stocks higher on Tuesday, with all three major indices trading above the 50 DMA for the first time since April. Dow rallied 2.4%, S&P gained 2.8%, and Nasdaq rose 3.1%. And stocks in Asia Pacific soar on back of a solid handover from Wall Street. For our own markets, SGX Nifty signals a strong open. In our What's Trending segment, we discuss the rupee challenge as it breached the 80 mark against the dollar for the first time. We also discuss the technicals of Wipro ahead of earnings today, along with companies like Ambuja Cements, Grasim and L&T Finance. Okay, let's get going and discuss some stocks that are likely to be in the spotlight today with Gautam Shah of Goldilocks Premium Research. Good morning, Gautam. Great to have you on board. What is the trade setup telling you today? Tomorrow is the weekly expiry, so ahead of that, the momentum looks solid?
Good morning, Karunya. Yes, the momentum looks solid. I think last week's pullback and the kind of pullback that you saw gave you the idea that the market is finding support at lower levels. And I think we've had these recoveries a few times in the last 8 months, but this recovery has looked very different on the screen and on the charts, because the market has stopped reacting to bad news, and every time it comes close to support levels, it rebounds really well. I mean, it happened last Friday when we were at the doors of 15,850, 15,900. And I think the market is enjoying leadership from multiple places, which is good to see. Broader markets are doing extremely well. So on the Nifty itself, I think our working target has been in the form of 16,600 to 800. So we hope to get close to the same in the next few trading sessions. And that will be a point where we once again take a step back and review the setup. Because if the Nifty is able to get past this wall, then the next bigger target that we are looking at is about 17,400. So all in all, I think the setup is good. The trend is good. There are no signs of topping out, no overbought indications. All dips will be bought into. And I think more and more participants have started to realize that it doesn't make sense sitting on the fence. This is the time to stay active and, make the most of the rally.
Okay, all right. I want to bring up Wipro because today is the company's earnings as well, and IT overall has been, in the limelight for all the wrong reasons. There's been a massive consolidation that has taken place on most of these heavyweight counters. Results, yes, seasonally Q1 is a weak quarter, and despite that, they've done, fairly decent, I would say, so far, the companies that have reported their numbers. For Wipro also, we expect a softish quarter, but on the charts, what kind of a momentum do you foresee?
Well, the IT sector has been on our ignored list for the last 4 to 6 weeks. Reason being, there is no relative outperformance. We like to use the ratio charts, and therefore we are committed to other sectors like capital goods, autos, and FMCG. But I think, having said that, I think the IT index decline is a little overdone. And I think what happened yesterday and the last 2 sessions tells me that maybe you are hitting a temporary bottom, not just for the index, but for many of these popular stocks. So whatever happened to the results today, I think the worst is now discounted, and there is a greater possibility for Wipro and the entire IT pack to rebound from here. So the risk reward for a long trade is quite lucrative. But as a technician, I like to follow, leadership, and therefore I'm not so keen into trading and investing into IT. It can do well, but it will not do as well as other sectors in the market.
Okay, but it's an interesting view actually, because most people we have been interacting with about IT heavyweights, continue to still opt for an avoid on many of these names. Even Wipro was discussed yesterday as well, and it was a no-go for the expert. But okay, moving on to Ambuja Cements, another earnings candidate. This one has already delivered its numbers last evening. Profit has fallen 25% on expected lines because of the surge in fuel costs, the surge in power costs, etc. Revenue, however, was up 150% year on year. But let's talk about the performance of Ambuja Cement, how it has been in the last, 1 month decent uptake, largely in line with how the market momentum overall has been. But going forward, do you expect any positive action on this counter?
Well, it just seems as if the path has changed for Ambuja Cements because it stopped moving in line with the entire cement pack. And maybe that's happened after the Adani, angle that came into play some time back. So I'm tempted to believe that Ambuja can actually do exceedingly well from here. I like the entire sector as well. But if I have to pick a couple of stocks, I think it would be Ambuja and it would be Ultratech. So I would be bullish. I think it's setting up for a sort of a rally that could continue for many weeks to come. In the difficult times, this is one stock that just stood out and just stayed in a range. So it just told you that there was no selling pressure. So yes, if you are a medium-term investor, this might just be a good time to make some commitments.
Okay. Another heavyweight we would like to discuss is Grasim. Once more, there's a corporate development there which could keep the stock in focus today. It plans to foray in a B2B e-commerce platform for building materials. Interesting update there, and it's already earmarked a sum of 2,000 crores to invest in this business in the next 5 years in a staggered manner. But Grasim, if we look at it once again, a quiet mover. What do you foresee on the charts?
Well, it's been quite off late, but I think 2020-21 is probably one of the better performers in the market, and I think it's still digesting those gains. So I think it's got into a period of time correction. I don't see the stock going up too much, going down too much. I think it'll just stay in a range. And many of the high flyers of the last 2 years, which were the biggest winners, are just taking that backseat, and new leaders in the mid caps, small caps, even in the large caps are emerging. So nothing negative on the charts, but nothing to say that the stock will go back to its winning ways.
Okay. Okay, all right. Now, I want to also pick out a name from the broader markets. That's L&T Finance. Q1 PAT, very good growth seen there, YOY, 47%. There was a fall in impairment on financial instruments, which essentially aided the bottom line performance. Revenue from operations was flattish. It was actually down marginally on a year-on-year basis by about 1.5–2%. But L&T Finance, how do you foresee, the future for this particular counter? 1 month, it has been largely quiet.
Yeah, so anything that's not participated in these last 3 weeks, while the Nifty has run up 1,200 points, is clearly a suspect. And I don't want to be committing into those names. But I think financials in general, if you look at some of the other stocks in the same sector, whether it's a Shriram Transport Finance or an M&M Finance, or for that matter, even a Bajaj Finance, I think all of these stocks are setting up quite well. So it seems as if there is a new theme that is emerging. But unfortunately, we don't have a similar chart setup for L&T Finance. So I like the sector, but maybe not the stock.
Okay. A lot of questions coming your way, and we started with Wipro, and we are getting some queries with respect to IT names only. Trilok is writing to us and wants your view on Infosys and TCS for the short and long haul. And you're fairly optimistic about Wipro, but are you equally positive on these two?
Yeah, see, everything in the markets is about risk and reward. And I think Wipro is a stock that has lost almost 50% in value, without any significant change in fundamentals. And that's how markets are. So at levels of 400, I just feel that your downside is 5 to 7%, and your upside potential could be anywhere between 10 to 15%. Purely from that perspective, I feel this might be an investing opportunity. Coming to the top two big boys, I think I would prefer Infosys. I think it's been far more steadier. It's been in a sort of a range in the last 1.5 months. And if the IT index does well from here, I think it will be led by Infosys. So if I have to pick, two among the top 4 or 5, it would be Infosys and Wipro.
Okay. Makes sense. More questions coming from the IT space. Sujan Naik wants your view on Coforge and Tech Mahindra. Do you think have they bottomed? That's the question that he wants to know the answer for.
This is a market where you shouldn't be catching a falling knife. Many of these stocks are trading near 52-week lows. And there are so many stocks in the FMCG, auto, capital goods sectors, which are trading at 52-week highs. So I rather recommend your viewers, to commit themselves into stocks where the moves are cleaner, it's more easier. Why make it tough for yourself by trying to buy stocks which are at 52-week lows, which may or may not rebound? Yes, and that's why I keep saying it's an investing opportunity. Don't look for trading returns. If you have a 6 to 12-month horizon, some of these mid-cap IT names, I think they've fallen a lot and they are at long-term supports, but they could rebound. But I would still focus on the other sectors I spoke about.
Okay. Let's shift gears and talk about some more, other businesses as well. Rohit wants to know your view on Reliance Industries, and the quarter gone by is likely to have been a strong one. Analysts expect a very solid performance. GRMs are likely to come in at a very high level. So, ahead of the numbers, how do you expect Reliance to behave?
See, in the last couple of weeks, Reliance has underperformed, mainly on account of the news flow that hit the stock. And thereafter, it's just been in a sort of a range. I think this 2300, 2350 area is a huge medium-term support. Till that number is respected, I'm tempted to believe that it can rebound from here and go back to levels of 27, 2750. But once again, why work very hard when you have some lovely setups in the form of ITC and Hindustan Unilever, M&M and Maruti, which have much solid setups. But Reliance, if you have to take a medium-term call, you have to stay invested. It's one of the best proxies to play the India story. It's a very large heavyweight. And I think at some point of time over the next 1 year, it will see a level of 3,000. So no near-term strength, but medium-term looks solid. And this is a good risk-reward buy here.
Okay, another risk-reward buy then, Reliance Industries. Moving on, ONGC, another stock that we would like to flag off. Neeraj wants your view here. ONGC, what do you think? Where is it headed?
I think it's lost its way. There was a brief period in between where it did exceedingly well and it got everyone excited. In fact, even the entire PSU back. But now I think given all the developments around oil, I think it's just too volatile. So I think one should not focus on ONGC. There are much better picks in the market. In fact, if you can stay in the PSU theme, which I like. So a Coal India or an NTPC, I think are much better setups. So if you have to play PSU, rather play on those two names than in some of these oil PSUs.
Okay, all right. A big underperformer, this year has been HDFC Life. In fact, for the last 1 year, it has been extremely sluggish, extremely quiet and weak. And Ashish Pandey, one of the investors, wants to know if he should book losses because he also, like many others, have been waiting for more than a year for the stock to perform.
Yeah, that's true. I think we've been liking HDFC Life for a very long time from a long-term perspective. But then insurance as a pack hasn't done well. So it's not just HDFC Life, but anything to do with insurance in the last 12 months hasn't done well. In fact, markets have been in correction mode for the last 9 months. But I think at levels of 530, 540, I think the downside is not much. We just need a close past 565. I think once that confirmation comes, the stock can get back on track. And I'm seeing many HDFC Group companies now at long-term support. So I don't think this is the time to, panic or to lose patience. If you've held on for the last 1 year, maybe this is a good time to just stay with it because markets are looking up and many insurance stocks and our custom insurance index, I think, are at support. So I think a rebound from here is more likely.
Okay. Since we're talking about HDFC group companies, I want to also ask you about the prospects of HDFC Bank. Last week, the numbers came out on Saturday. The stock has been very quiet. In fact, being quiet has been, a trend that HDFC Bank has witnessed time and again in the recent past. Talk to us about important levels to watch here.
See, this is huge underperformance, and this leadership changed a year back when ICICI and SBI started to do much better than HDFC Bank. Even now, the 1300 area is a huge long-term support for HDFC Bank. If you really go back and check the history of the last 7 years, you'll understand what I'm trying to say. So that's probably the reason I feel that it can rebound from here. But again, it's going to be a slow mover. I think there are just too many people committed into it at high levels, and therefore it will keep attracting selling pressure at high levels, and the FI positioning is not helping. So I would still stick to an ICICI, SBI, and a Federal. I think that's my pecking order. I think these three stocks can do much, much better. So only if you are a very long-term investor, you commit here. Otherwise, stay with the other names.
Okay, all right. We've been talking about a lot of underperformers. So let's bring up a Mahindra and Mahindra, a solid outperformer. And what a rally has it seen in the last, 5-6 months, almost doubling in terms of the stock price. So talk to us about where is, it headed and when would be a good time to buy? Is this a good entry level, or should one wait for some dip or some cooling off to happen?
I think one should wait for some cooling off. Let's not forget the auto index is at a lifetime high, while the indices are far, far away from their own highs. So the outperformance is here. But I think our eventual target for the NSE auto index is about 13,400. So there is another 10-12% to play for. So should you be buying at these levels? Maybe partially. You will get those dips because the markets are volatile. And when you get those 3, 5, 7% kind of a dips because of the market correction, look to keep adding, because I think a Mahindra can gradually move to levels of 1300, 1350. And let's not forget, it's come back after many years of underperformance. So I don't think this is going to end in a hurry. And even some of the other names we've been liking, Tata Motors, Maruti, we covered it officially some time back. So that's looking good for 94, 9500. So I think stay committed in auto, buy some, look to buy more, on dips.
Okay. Another outlier is Petronet Lng. Solid gains coming in last 1 month. I think 15-16% rally that's been witnessed on the counter. Mohit wants your view on Petronet. Can you tell us what's it likely to do?
Well, unfortunately, I don't have a view because I don't remember the last time I saw this chart. It's been such a low-profile name, having done nothing for years now. So I think the fundamentals also just don't look justified enough for it to do well. So honestly, no view. I think stay with the outperformers. I think that's the key takeaway for your viewers. Stay with stocks that move with the market. That's how your portfolio will create outperformance. And I think real estate and capital goods, fit the bill. The L&Ts, the Cummins India, Siemens, DLF, Oberoi Realty, Brigade, some of these names which are doing so well right now, commit into them and not into some of these names.
Another name that comes to mind that has done well in the last couple of weeks is a Hin Zinc, a heavyweight, and something that, we seldom discuss on the show. We have a query coming in from Prasad Naik. So could you share your view on this counter?
I would stay away from metals
Okay.
at the back. I think it's had its run. It's had a wonderful 18-month run where everything did well. Many stocks moved up 3, 4, 5x. But now I think it's taken a bit of a backseat, and I don't see any of the metal stocks, doing significantly well from here. They could see small rallies from time to time because of the market strength, but I don't think they're going to make highs in a hurry. So Hindustan Zinc, again, if you're a long-term investor with a 3-year view, this might be a good entry. But if you're looking for outperformance over the next few months to few quarters, I don't think that's coming.
Okay. We have time just for one last question. I want to flag off a Hero MotoCorp. Since we were talking about the outperformance that auto sector has seen, many of these, heavyweights, whether it's Maruti, Ashok Leyland, we just discussed M&M, even Hero MotoCorp has been part of that party that has been going on for the auto stocks. Do you think that it will continue from current levels, or do you see some consolidation or some profit taking at these levels?
Well, Hero Moto has been late to the party and it's still standing close to the door, I would say. I would still bet on some of the other names which are much better placed. Hero Moto 2, I think the fall was very overdone. I think the comeback has looked good, and now as the auto index does well, Hero Moto has the potential to go up 10-15%. But it's not on top of my pecking order. I do like it as a chart, but I would still prefer M&M, Maruti, Tata Motors as my top 3, followed by Eicher Motors and Hero Moto.
Okay. Gautam, it's great to have you on board, and you've given us a lot of insight into what's happening in the markets and addressed a lot of queries. But just before we let you go, you've told us about staying with the outliers. But what would be the best way to look at the markets right now, given the very wild gyrations that we're looking at? Because many of these outliers are also now at very high levels. So what should be the strategy for a retail investor?
Well, it depends how you read high levels. I think the kind of decline that you saw in the last 9 months, where the average fall in the NSE 500 was over 40%, if you compare that with the kind of rally that we've seen from the lows, it's very small. So don't look at it from that perspective. I think then you will miss the bus because nobody, ends up buying right at the bottom. But I think what is important is be stock specific. I think this is a market where mid caps and small caps are giving you immense opportunities. And many of these, smaller infrastructure plays, auto ancillary names, some of the sugar names, cement names, real estate names. I think these are all big themes which are here to stay. So ignore the index, stay with mid caps and small caps as a basket, and I think you will do very well.
Okay, Gautam. On that note, we'll let you go. Thank you once again for joining in. Let's shift gears and talk about what's happening in the macros. Rupee has been the big talking point, and that something that continues to be the big story that we are also tracking right here on Money Control. The rupee has weakened past 80 to a dollar mark for the first time in early trade yesterday. But yes, it did recover following some rupee buying by PSU banks, presumably on behalf of the RBI. The currency closed the day at 79 rupees 94 paise to the dollar. So let's discuss this more with my colleague Ravi Krishnan, who tracks the space very closely. Ravi, first time ever, rupee has come at 80 per dollar. What are the fresh economic challenges that loom large at this point, and how would this impact the dynamics of our own, of our country's balance sheet?
Well, there are no fresh economic challenges. These economic challenges, which I'll talk about, have been around for some time now. Yeah. So essentially, I mean, why is the rupee weakening? We are seeing a lot of foreign portfolio investor outflows happening. Since December, we have seen around $35 billion of FPI outflows. Oil is very volatile. Last week it had dipped below $100 a barrel. It is back again, $106 a barrel. I'm talking about Brent crude. And of course, you saw how the US inflation print came last week. So that has raised the specter of the US Fed raising rates by as much as 100 basis points when it meets later this week. Next week, sorry. So because of all these reasons, these are all putting pressure on the currency. Current account deficit, the trade deficit is widening. And overall, the current account deficit, is expected around 3% of GDP for this financial year, which will be the highest in several years. All these factors are putting pressure on the rupee, and these are not likely to reverse quickly. I mean, it will happen gradually. The rupee will continue depreciating, I would think.
We've also reported about RBI's intervention as well. And in fact, in the past, for several of these downturns and these economic challenges, economically challenging periods, we've seen the RBI intervene. This time around, what's different, and what exactly do you think the RBI needs to do to sort of curb this worry?
Well, I mean, see, the RBI does not have a stated target for the rupee. It's only, what it has said publicly is it wants to ensure that whatever movement happens in whichever direction, it has to happen in an orderly way. There should not be any jerky movements or sharp volatility. To a certain extent, it has, I would say, succeeded in that. See, remember this, the rupee's fall against the dollar is not as bad as for many other currencies. The Thai baht and the Turkish lira, for example, have fallen more. Even the euro, for example. And if you look at the rupee's rates versus the Japanese yen and the euro, it has actually appreciated against these currencies. So it's, to a certain extent, the RBI has done its job. I believe it should not, foreign exchange reserves have come down by around $60 billion since their peak. But they are quite comfortable at around $580 billion, which is the last reading. But the RBI cannot target any level for the rupee. It is a fool's errand. All it will end up doing is deplete the foreign exchange reserves and to no avail. So all it can do is to ensure that the movement is smooth. There is no way that the RBI can target, it should bring back the rupee below 80 a dollar, or it should bring back the rupee to 75 a dollar, or stuff like that.
You also talked about FPI outflow, because largely doesn't it look like a chicken and egg situation, because a weaker rupee will further discourage FPI investment. So when will the cycle, and how could the cycle end?
Well, FPI outflows, see, again, India, it is not so bad compared to many other emerging markets. Domestic drivers are still, reasonably strong. They are resilient. Even the external debt situation is for India is not as worrisome as, say, it was in 2013, when we saw the taper tantrum, when the rupee fell quite sharply. The general expectation is that FPI outflows will resume in force, maybe by the fourth quarter of this year, because what we are seeing is that there are expectations of a recession in the developed world. In India, we are unlikely to see a recession. Growth anyway is going to slow down, but it will still look good compared to most of the countries of the world. So we could possibly expect, FPI inflows to resume. But remember, yesterday was the second consecutive day for which there were FPI inflows in India. So I don't know. I think it's too early to call it a trend reversal, but there you are.
Keeping our fingers crossed then, Ravi. Thank you so much for joining us. And guys, we'll have to wrap it up right here on Morning Trade with Money Control. Thank you so much for tuning in.